Ladies and gentlemen, good day and welcome to Ujjivan Small Finance Bank Limited Q1 FY2024 earnings conference call hosted by IIFL Securities Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Rikin Shah from IIFL Securities Limited. Thank you and over to you, sir.
Thank you, Salvin. Good evening, everyone, and thanks for joining the call. We have with us the management team of Ujjivan Small Finance Bank to discuss the business strategy and outlook post the 1Q results. The management team is represented by Mr. Ithira Davis, MD and CEO, Ms. Carol Furtado, Chief Business Officer, Mr. Martin P.S., Chief Operating Officer, Mr. Ashish Goel, Chief Credit Officer, Mr. M.D. Ramesh Murthy, Chief Financial Officer, Mr. Vibhas Chandra, Head Micro Banking, and Mr. Deepak Khetan, Head Financial Planning and Strategy IR. With this, I'll pass on the call to Mr. Ithira Davis. Over to you, sir.
Thank you, Mr. Shah. Good evening and welcome to our first quarter earnings call. I am delighted to share with you our first quarter performance. Despite Q1 generally being a slow quarter, our performance has been robust, building on the strong base of financial year 23. Our pre-provision operating profit and PAT have reached new highs of 458 crore and 324 crore respectively, which is 52% and 60% higher than Q1 of the last year respectively. Even against Q4 FY23, it is 12% and 5% higher respectively. Our return on assets at 3.8% is again something that puts us ahead of our peers, and that has been the trend for the last few quarters. Some of it is due to lower credit cost, but even our PPOP ROA at 5.4% is quite remarkable. We posted a return on equity of 30%, which also means that the business is self-funding itself, leading to an improvement in CRAR from 25.8% to 26.7%. Now, starting with the business numbers, we disbursed 5,284 crore, up 22% year-on-year. While the demand continued to be there, disbursement for microbanking was sequentially low due to Q1 being historically a weak quarter. We expect the disbursements to pick up again in the second half of the fiscal year. We acquired about 2.6 lakh new customers this quarter in microbanking. As our new branches move towards maturity, we will see more traction in microbanking, especially in the new customer acquisition. Among the secured products, affordable housing, which is now more than 3,650 crore, continued to show strong disbursements, with 418 crore in the first quarter as against 288 crores in the first quarter of the last year. The business is slowly moving to our focus to improve operating efficiency. We have already opened 4 hubs in Ahmedabad, Coimbatore, Mysore and Jaipur. More will be commissioned over the next few quarters. As these hubs gain business momentum, it will further propel forward.
I'm really sorry to interrupt. Well, sir, there is a lot of disturbance from your end right now, due to which you are not audible. If you could please just readjust the microphone where it is placed, that would be great.
Yeah, is it better now?
Yes, sir, that has made some difference. Thank you.
Yeah, I'll just go through the business numbers again in case it was not very clear. Okay. Starting with the business numbers, we disbursed 5,284 crores, up 22% year-on-year. While the demand continues to be there, disbursement for microbanking was sequentially low due to Q1 being a historically weak quarter. We expect the disbursements to pick up again by the second half of the fiscal year. We acquired 2.6 lakh new customers this quarter in microbanking. Our new branches move to maturity. We will see more traction in microbanking business, especially in new customer acquisition. Among digital products, affordable housing, which is now more than 3,650 crore, continue to show strong disbursements with 418 crore in the first quarter against just 288 crore in the first quarter of the previous year, that is FY23. Business is slowly moving a hub-and-spoke model to improve operating efficiency. We have already opened 4 hubs, one in Ahmedabad, the other in Coimbatore, then Mysore and Jaipur. More will be commissioned over the next few quarters. As these hubs gain business momentum, it will further propel our growth. The FIG dispersed 320 crore, up 113% year-on-year. MSME continues to be in transition. We have a few more technology-related changes to be introduced before we ramp up the business. This will be much like what we went through during the housing, transformation. So once that is ready, we are ready to launch. So we also launched the semi-formal LAP product in Q1 and more products are in the pipeline. The business should start to pick up towards the end of this fiscal. Vehicle finance and gold loans should also start to contribute in the second half of the year. Our gross loan book now crossed 25,000 crore and on June 30th was 25,326 crore, up 30% year-on-year and 5% quarter-on-quarter. Talking about liabilities, our deposit grew 45% year-on-year and 4% quarter-on-quarter to 26,660 crore. We continue to see movement of CASA deposits towards term deposits this quarter, which is in line with the industry trend. Our retail term deposits grew 71% year-on-year to 10,970 crores, while CASA grew 27% year-on-year to 6,556 crore. Our cost of funds has continued to rise this quarter in line with the industry. Despite pressure from cost of funds side, we were able to expand our NIMs this quarter. This was a result of consciously reducing excess liquidity, which was driving a negative carry and pulling down NIMs, and benefiting from the yield expansion of an effect of book repricing, which we took last year. Last year we had 2 repricings on the microfinance book, one in September and the other in March this year. All of those.
Sorry to interrupt you again. Apologies. Sir, there is a lot of disturbance from your line. Just let me quickly get you reconnected.
Yeah, please do that. Because I'm messaging them not able to hear.
Ladies and gentlemen, the management line is now connected. Sir, you may proceed.
I'll just go back a few sentences to our gross loan book. Our gross loan book has now crossed 25,000 crore, and on June 30th, it was 25,326 crore, which is a growth of 30% year-on-year and 5% quarter-on-quarter. Talking about our liabilities, our deposits grew 45% year-on-year and 4% quarter-on-quarter to 26,660 crore. We continue to see some movement of CASA deposits towards term deposits this quarter, which is in line with the industry trend. Our retail term deposits grew 71% year-on-year to 10,970 crore, while CASA grew 27% year-on-year to 6,556 crores. Our cost of funds has continued to rise this quarter in line with the industry. Despite pressure from the cost of funds side, we were able to expand our NIMs this quarter. This was a result of consciously reducing the excess liquidity, which was driving negative carry, and pulling down our NIMs and benefiting also from the yield expansion as an effect of our book repricing post the hike we took last year. Last year we took two hikes on the microfinance front, one in September and one in March this year. The full effect of that is being felt in this quarter and beyond. So our net interest income was up 32% year-on-year and 7% quarter-on-quarter, driven by gross loan book growth and yield expansion. Coming to credit and collections, our asset quality remains sturdy with the GNP of 2.4% versus 2.6% sequentially, while our NNPA continues to remain negligible at 0.06%. Slippages remain under control with Q1 slippages at 103 crore and upgrade and recoveries at 77 crores. Restructured book now is at 182 crores with June 23 collection efficiency at 102%. While the NPA collection has started to move down towards normalization, bad debt recovery remains strong this quarter. We recovered 35 crores. As we have already mentioned, our bad debt recoveries should be significant even in financial year 24, although it would be lower than what we recovered in financial year 23. During the quarter, our branch expansion continued with 32 new branches added. 14 of these were in the east, 8 in the north, 6 in the south, and 4 in the west. This quarter, and that takes the total to 661 as of the 30th of June. We will now be adding 70-odd branches for the rest of this year. We are in the final stages of testing our digital fixed deposit offering, which will provide seamless experience to our customers and help us to serve beyond brick and mortar. Now an update on the merger with our promoter, Ujjivan Financial Services. The hearing of our application with the NCLT was completed on June 28th, and we expect to receive the order soon entailing directions for scheduling the meetings of stakeholders and other directions as the NCLT may deem fit. On my succession plan, as I've been mentioning, the board is working on identifying the right candidates. The board is committed to identify the potential candidate with strong business orientation and a connect with the ground and dedication towards building a mass market bank. Both internal and external candidates are being considered. And, much before the due date, the transition will be completed. As many of you would have noticed, we have launched our nationwide brand campaign a few days ago, earlier this week. This campaign is a prominent step towards establishing Ujjivan as a mass market bank. Previously, we had not invested much on ATL brand campaigns, but moving ahead, we will continue to invest in brand building. This will provide our branches more awareness and help us build trust across our customer base. This in return will push our retail liabilities further. To conclude, I would add that business momentum remains strong, reassuring our confidence towards the guidance that we shared at the beginning of this financial year. Thank you.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question comes from the line of Nitesh from Investec. Please go ahead.
Thanks for the opportunity, sir. 2-3 questions. Firstly, in the MSME segment, we have seen some deterioration in asset quality and growth slowing down. We are reorienting that business. Can you speak about the strategy in which segment we will be operating in? Yields, what will be the targeted yields and profitability in that MSE book going forward?
So could you please repeat that question?
I'm asking about the strategy in the MSE book, given that we have seen growth slowing down where we have been a bit cautious and we are reorienting that business. So what is the strategy going forward? What segment, customer segment, yields, ticket size we will be focusing on?
Hi, this is Carol Furtado. As we have been talking about the transition that has been taking place in our MSME segment, we have been talking about our customers under various categories. One is a semi-formal LAP. The other one is the formal LAP. We are also getting into the working capital facilities, supply chain, and digital MSME lending. Semi-formal LAP, the target is semi-formal micro and small enterprises who are transitioning from the unorganized and the informal business model to the organized and formal business setup. Here, the offering would range from 15 lakhs to 1.5 crores and the tenor up to 12 years. We have already launched this product since May, and this product seems to be on a growth path. The formal LAP is where we would be focusing on formal, micro, and small and medium enterprises who are operational as an organized formal business setup. Here, we are proposing to offer a loan size of around 25 lakhs to around 5 crores with a tenor up to 15 years. This would be set up in select locations to grow the LAP portfolio. The third line would be the working capital facilities, again, where the target is formal, micro, small, and medium enterprises. This is to fulfill their business banking needs. And we would be offering a variety of products here, fund-based and non-fund-based facilities. Here again, the ticket size would be around 15 lakhs to around 10 crores. Supply chain is again there, which is being worked on to meet the cash flow-based short-term funding requirements of our customers. And we also would be having digital MSME lending, which we will grow through our fintech partnerships. Yes, we have been operational since May in the semi-formal LAP segment, and we are investing heavily to build infrastructure and internal capabilities to strongly address the other 4 business lines in the MSME vertical. And that is the reason why the transition is taking some time to operationalize. And we have made significant progress in designing the strategy, and we would be showing the progressive outcomes in the coming quarters. And the full extent of the investment would be visible in the span of the next 2-3 financial years.
Sure. And is it reasonable to expect that the yields in this portfolio will be, let's say, sub 12%, given that we are largely operating in formal segment and higher ticket size?
Yes, the blended rate would be around 12-13%.
Sure. And a data keeping question on the customer acquisition in the microfinance group and individual loan side. What is the count of customers that we have acquired in this quarter, and what is the active customer base on both microfinance group and individual as of June 23?
So, yeah, hello. As far as customer acquisition is concerned, we have acquired 2.6 lakh new customers this quarter. And what was your second question? And overall, our base in microfinance is close to 40 lakh.
I wanted to break up in group and individual, if that is possible.
Okay. For the quarter or the entire micro banking customer base?
As of June 23, what is the active customer base in microfinance group?
In microbanking, we have 40 lakh borrower base. Out of 40 lakh, 36.5 lakh customers are group loans and 3.5 lakh customers are individual loans.
Sure. Thank you, sir. That's it from my side. Thank you.
Thank you very much.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 1 or 2 per participant. Should you have a follow-up question, we would request you to rejoin the queue. The next question comes from the line of Shailesh Kanani from Centrum Broking. Please go ahead.
Congratulations, sir, on excellent performance during the quarter, and thanks for the opportunity. Sir, my first question is with respect to our individual lending book. We are seeing very good traction on that front. Can you share some qualitative aspect with respect to the book and the customer profile, given that it's a high ticket size loan? What traction we are seeing, what kind of customers we are seeing over there?
Yes, individual loan is something which, is an old business in Ujjivan. We started this business into an 8 long back, as we realized there is a huge potential of customers upgradation from GL to IL. Our current average ticket size is close to 1.3 lakh in IL, where the customer graduates after 2 to 3 cycles. And we see a huge potential here because large number of customers actually try to graduate after 2 to 3 cycles. And there is a gap. There are microfinance players and then there are other players also who are into formal financing. But these customers don't get finance from anybody. We have started this. We have close to 3.5 lakh customers at this point in time. And we want to grow this business as we see huge potential going forward. Largely, customers are divided into 3 categories. We have business loans. We also have agri and allied business in IL. And a good amount of customers also take home improvement loans. These are the basic 3 categories of loans that we offer.
Okay, that's useful. So, second question is with respect to yields on affordable housing segment. They seem to be little on the lower side. So, can you just highlight about that and if there is any scope of improvement in that segment?
Yeah, the yield for the affordable housing segment is around 13%, which is excluding the MLAP business, and it has been in this line only around 12.9, 13% odd. And I did not understand what you mean that it is on the lower side.
Yeah, just considering that it would be semi-informal segment, I was of the view that the yields might improve on that front. So just wanted to know your view on that.
As we move more towards the tier 2 and 3 towns and beyond that, yes, there would be a little improvement that might happen. Our yield on disbursement is around 13.2%. So for salaried, the yield is around 11 to 12, and for semi-informal, self-employed and all is around 14%.
Okay, that's all from my side. Thanks a lot.
Thank you, Sailesh.
Thank you. The next question comes from the line of Manish Ostwal from Nirmal Bang Securities Private Limited. Please go ahead.
Yes, sir. I have a question on your comments in the press release where you mentioned that we remain confident of our sub 100 basis point credit cost for FY24. Given your collection trends in the business and so this guidance don't you think it need to revise downward, or still you think there is a risk which may play out?
So, thank you. This is Ashish. So in the first quarter, we have actually had much lower than the a low credit cost. You could say about 10 bits on the overall book. We have given a guidance of about 1%, but our book is maturing and will continue to mature during the course of the year. So there could be slightly higher credit cost in the third and fourth quarter, which we are factoring in when we give a guidance of about 1%. But we've always maintained that it will be lower than 1%. So that is, we maintain that. We will continue to see a lower credit cost during this quarter on quarter this year. And it should, sum up to less than 1% for the year.
Yeah. And secondly, in our one of the slide where we have mentioned the collection efficiency in segment wise. So I was seeing MSME, the collection efficiency is quite stagnant, and the second is other segment. So what are the efforts we are making to improve the collection trend in these two categories?
So in MSME, what you see here on the slide is billed in the month and collected in the month. But there is also a good amount of additional collection which we do, which is collected in the next month. So overall, if you see the collection efficiency, including the overdues, it has been maintained at 98.5% throughout the quarter. What you see here in this slide is 88, 87, 88, which is the collection for the month, but there is also overdue collection which we do month on month. So this is also a result of stabilized cases in bucket 1 and 2.
Okay. And
Anish, if you see the additional collection, that also is quite a hefty amount. That's what Ashish is referring to. Also, one more thing, the collection efficiency, 88-87%, is including the GNPA par portfolio that we have. And given that MSME current GNPA numbers are high, this number seems to be a little lower. However, as he mentioned, the NDA bucket collection is quite good. And even from the par SMA 012 and your NPA collections are quite good, which are happening. So if you add up the total collection, that will seem to be a very good collection that is coming in.
Thank you, Deepak, and thank you, management team, for answering my question. Thank you.
Thank you, Anish.
Thank you. The next question comes from the line of Renish from ICICI. Please go ahead.
Yeah, hi sir, and congrats on a good set of numbers. Sir, just two questions. So one is on the liability side. So if we refer to the new customer acquisition in the quarter, actually that has gone up from 3,35,000 to 3,41,000. And when we look at the average SA balance, it is that also remained sort of flattish sequentially. And despite that, our SA balances has sort of contracted by 4%. So what explains this, sir?
Renish, SA balances, if you see, it's an industry phenomena that the SA balances, CASA is going down for almost all the banks who have reported their results so far. If you see for Ujjivan a little longish period, you will actually see that the CASA has grown quite handsomely. So we would say that this is more or less in line with the industry, a little better off with the industry, and with the new facilities that we are providing, new products that we are coming up with, and the retail, the brand campaign that we have launched, these balances will improve going forward in the coming quarters.
Got it. And secondly, on the ROA side, so last 4-5 quarters, given the very low provisioning requirement, plus the strong AUM growth. So now on a steady state basis, once the credit cost normalize, as you guys were highlighting that second half we'll see a slightly higher credit cost. So on a steady state basis, what kind of a ROA this business can generate?
Renesh, on the ROA side, we have mentioned that for this year, we'll definitely see a 3% plus ROA. We maintain that guidance on that. We have mentioned that the ROEs for this year will be 22% plus. We maintain that guidance. There might be a little upswing to that depending upon the market condition, but right now we do not want to change any guidance.
Not for this year. I'm saying on a steady state basis, once some of the operating parameters normalize, especially credit cost. So in that scenario, does the let's say the current business mix should generate a 2.5% ROA on sustainable basis, or how one should look at it?
Definitely, we can do that, and maybe more than that. We can definitely do that.
Okay. That's it from my side, Deepak. Thank you.
Thank you. The next question comes from the line of Sukriti Jiwarajka from Lambron Capital. Please go ahead.
I just want to follow up a little bit on the asset quality of the MSME book. Like you just mentioned, both the GNP and the PAR numbers are quite high. And the thing is that they've been quite sticky and quite high for a few quarters now. What is causing the stress? Which pockets, which sectors? Maybe some light on why these numbers continue to be so high, even the PAR numbers. And what is the path to bringing this down?
So there are, 2-3 reasons that I would want to list down. One, our book has not grown, so therefore the percentages are looking high. But if you look at the absolute numbers have been stable and move a little up or down quarter on quarter. But the denominator effect has impacted the percentages. In terms of slippages, these slippages have been under control. The NPA number in absolute number has been under control. And our bucket X efficiency has been...
Operator request has been initiated. If you'd like to cancel this request, please press *0 again.
Leading indicators. Yeah, in terms of geography, you mentioned that which geographies are causing this. There is a little bit of NPA in West Bengal, which is slightly elevated as compared to the rest of the regions.
Got it. And a similar question for MFI, if you are seeing any early pockets of early warning signals or any early pockets of stress, because the thing is every MFI is guiding to 30% growth over a very high base, and a lot of banks are looking to aggressively get into this space. So as a conservative lender, are there any signals of customer over leverage or something that is coming up in our radar?
One of the advantages we carry is our book is spread across 25 states. So that makes us less vulnerable to geographic stresses. So, we also have a statewide cap. Most of our bigger states are also capped in the range of 15%. And there are 3 states which are above 10%. Every other state is between 5 to 10%. In terms of high growth states, our market share is in the range of 3 to 4% all across every state. So there is no specific area where we have any high concentration of the book. In terms of growth, we've been maintaining, a 0.6% 30 plus MOB. 30 plus in 18 MOB book, which we've been monitoring for the last 24 months consistently post-COVID. And this has remained steady for us. One more thing which gives us confidence is our non-delinquent book, which is, bucket 0,
that has been consistent above 99.8% for the last 18 months. So we've not seen any specific areas in which there are any, stresses building up.
Got it. No geographies. I understand that you have very well diversified your book, and that is not even the question. It is really on a macro level, if anything is coming up, whether it affects you or not, in pockets, in areas, in geographies.
If there is a change in, there are certain areas at certain times which are very topical in nature, like the floods, or if there is any other natural calamity. Those are the kind of things which do affect us.
Right.
So we had a marginal dip, for example, in certain regions in North, but those get recovered over the next month or so because these are again 15 to 20 day phenomena.
Got it. Okay. Thank you so much for answering my question.
Thank you, Susan.
Thank you. The next question comes from the line of Pritesh Bum from DAM Capital. Please go ahead.
Hi, good evening. Just two questions. One is a clarity needed. You've been, as a percentage of loans, 43% comes from new loans acquired. Is this a phenomenon that the existing loans are migrating to IL, or we are actually, have a rise in terms of new fresh loans?
So both things are happening. Our GL customers are also migrating to IL, as well as new customers are also getting added. So we, for example, said that we added about 2.6 lakh new customers in this quarter. This is in addition to about 9.6 lakh new customers we had added in the last full year. The net addition last year was about 6.5 lakh. So yes, new customer acquisition, which we opened last year, was a strategy, and we are also opening new branches. So that also gives a slightly, increase in our NCA numbers. So it's a combination of all these factors.
And that is the reason our ticket size also has gone down, is it?
Yes. Last year, you may remember about 5 quarters back, our ticket size had gone up 6 quarters back because we were doing largely repeat loans and we were very conscious about doing new customer acquisition because we didn't know what was the impact of COVID and how long it would last. But last year when we started our NCA strategy again, we started seeing as the new customer percentage has gone up, the average ticket size has gone down.
Sure. And which geographies these new customers are coming from? If you can give some more color on that.
All geographies. These are across branches. We have added team members across branches, and therefore there is no skew in any state.
Got it. Second question was the off-roll employees of collections are going down steadily. At what level will steady that number? And is that the reason why the other OPEX quarter-on-quarter was down?
So the way we are looking at it is our cost of collections, it remains in the range of about 20% with our off-roll staff. There are two factors here. One is the entire book which was affected by COVID is now 700 DPD and above. So obviously then collections will slow down over a period of time. And therefore, as the collections have slowed down, we have proportionately brought down our team size. The metric that we have followed is about 20% cost of collections. As the numbers keep going down, the team can be suitably, downsized. And the second reason is also that our NPA book has not grown. In fact, there has been a steady reduction of accounts in the NPA and the written-off pool. Last year, we reduced more than 1 lakh accounts from NPA plus write-off. So that has also contributed to a reduction in the off-roll team strength.
And your query on whether that has led to the OPEX reduction versus Q4? No, that is not really the primary reason for reduction versus Q4. Q4 business numbers, disbursements were much higher versus Q1. That is the reason why the numbers are lower.
Sure, that means it was a BAU, basically, business as usual.
Yeah, it's a business as usual.
Thank you.
So, yeah.
Thank you. The next question comes from the line of Himanshu Taluja from Aditya Birla Mutual Funds. Please go ahead.
Hi, sir. Congratulations for a good quarter. Just one question has been from my end. Most of the questions has been answered. Sir, last year you have made you have strengthened your collection team, and as a result, we have seen a very strong bad debt recoveries as well. But and given you have sent the momentum to continue FY24, sir, last year I think you have made a good collections bad debt recovery from the early delinquency period. Now, given the current NPA pool would be in a more harder buckets, so what sort of the recoveries that you think that you can probably achieve in FY24? Anything, and do you need the similar collection workforce in this year as well, which you have added the last year?
Himanshu, this is something that Mr. Davis touched in his opening remark also, that FY24 also bad debt recovery would continue to be very handsome. However, maybe a little lower than what we did in FY23. FY23 we did around 135 odd crore. This year it will be a little lower than that. Whether it will be 100 crore, 120 crores or 90 crores, I cannot comment on that number right now. But it should be in that range at least. That is what we believe. In terms of collection team size, as Ashish has already mentioned in the last query, the pool, the hard bucket pool where difficult collection is there, that pool size is shrinking as we move forward. So which is why the collection team size, slowly you will see the off-roll will shrink as we move along. But the on-roll team will stay. That is a strategy that we'll have, and off-roll will continue to shrink.
Sure, sir, sure. The second is just two more data keeping questions. What sort of the PSL income that you have made last year, and what you have recognized in this quarter, and generally which quarters generally you see a higher PSL income?
This quarter is 26 crore roughly. Last quarter PSL income, last year PSL income, let me check, was around what, 40 crores? Check. I'll just give you the exact number. What was last year full year PSL income? We generally PSL income you will see coming in the first quarter and the fourth quarter. However, I'll also full year was 28 crore. Last year full year was 28 crores. I will also mention that when you look at PSL income, you also look at the kind of IBPC that we are doing, because that also gives a similar benefit to the book in terms of lower cost of funds. So last year on an average we were having around say 1500 crore of IBPC. This year already I think the IBPC number is a little higher than that, and will continue at this number, this rate for the full year, around 2000 odd crore. So that additional benefit is also there this year.
Sure, sir, sure. And just last question, sir, within the MFI, any sort of the target that you have between the individual and the group, do you have, or how one should look at the growth between the two?
So, yeah, obviously, we want to grow much faster than GL because we have a captive customer base of over 40 lakh. In GL, where a lot of customers want to graduate to IL. So we will see IL growing much faster than GL in this financial year also. And we'll continue a trend from the last financial year. And for that, we have also strengthened our IL team, and we have, increased the number of feet on the street for IL in branches.
Sure, sir. Sir, thanks a lot, and congratulations for a good quarter.
Thank you very much.
Yeah.
Thank you. The next question comes from the line of Ashlesh Sonje from Kotak Securities. Please go ahead.
Hi team, congratulations on a good quarter. I have just one question on the OPEX for us. If I look at the cost to assets ratio that has been steadily coming down, over the past few years. And given that we are in a period where we are reporting very strong return ratios, how do we look at the cost ratio going ahead in terms of the investments that if we plan to make in the franchise?
Shlech, we have mentioned both for the cost to income ratio and operating cost to average asset ratio. For this year, they will be more or less stagnant. So right now, we do not change the guidance. We may see a positive swing there, but right now we'll maintain the guidance number. We'll see if we want to change the guidance when we come next time to meet the street. But right now we do not want to make any changes there.
Okay, and if I go ahead a few years in FY25-26, any...
Over next 3 years, yes, definitely these numbers will come down slowly, maybe around cost to income ratio, maybe around by 300, 350 basis point every year, it may come down.
Okay, perfect. Thanks a lot.
Thank you. The next question comes from the line of Manan Tijoriwala from ICICI Prudential Asset Management. Please go ahead.
Hi, good evening. I had a couple of questions. So first on the group loans concept. So what is the average ticket size that we have now in the first, second, third cycles?
The question is, what is your average ticket size in group loan in first, second and third cycle? Right?
Yes.
So our average ticket size in fresh loan is close to between 40 to 42,000. And in repeat loans, in the second cycle, it is close to 50. And third cycle onwards, the average ticket size is close to 60.
Okay. And how soon can we refinance the customer to a second or a subsequent cycle, and what is the tenor of the loans generally?
So, the maximum tenor that we allow to our customers in group loan is 3 years, and our average tenor is close to 22 to 23 months. And we allow our customers to take repeat loan only after completion of 70% of their EMI.
70% of the EMI. Okay. Understood. And how much of the loan book is now under 3 years, sir?
3 years.
Sorry, over 3 years.
So, yes. The 3 years tenor loan is close to 20 to 22% of our entire portfolio at this point of time.
Okay, understood. And sir, on the individual loans, are these all our MFI customers or are we sourcing from the market as well?
So, yeah, we have open market acquisition strategy as well, and we have kind of restarted our open market acquisition as we have stabilized after the effect of pandemic. And before that also we were acquiring open market customers, but these customers are largely referred by our internal customers, microfinance customers only. At this point of time, our open market customer acquisition is close to 5 to 6% of whatever we acquire in individual lending. But this number will also slightly go up in the financial year as we go ahead.
Mr. Manan, may we request you that you return to the question queue for follow-up questions, as there are several participants waiting for their turn. The next question comes from the line of Manoj Oberoi from ES Securities. Please go ahead.
Yeah, sir. Hi, congratulations on strong numbers. This is Rajiv here. So I'm left with just one question, and that is, when I look at your 1+ and GNPLs in affordable housing portfolio. Yeah, can you hear me?
Sorry, we're not able to hear you.
Now is it better?
Still you're not audible. Not audible.
Can you hear me now? Hello?
Hello,
am I audible?
Hello.
Yeah, hi.
Mr. Manoj, could you please fall back to the queue? We shall move to the next questioner. The next question comes from the line of Amit Jain from Axis Capital.
Could we reconnect the call? Operator, can we reconnect the call, management line?
Yes, for sure, that can be done. Just allow me a moment while I reconnect the call for the management.
Calvin, can you reconnect us?
Yes, I'm doing so. Ladies and gentlemen, the management line has been connected back again. Mr. Amit Jain, you shall proceed with your question. Thank you.
Yeah, hi sir. Can you hear me?
Yeah, we can.
Yeah, hi. Thank you for taking my question, sir. So I had a question on margin. So given that now that the rates have stabilized, and do we see that the cost of funds could increase further from current levels? And similarly on loan repricing, is it largely done, or do we have some bandwidth to further increase loan prices?
First on your cost of fund query. So cost of fund may go up from here as well because repricing of the old FDs may happen. So to some extent, we believe cost of fund has not yet peaked. Maybe we are around few quarters, maybe 2 quarters at least away when we see the interest rate cycles also peaking out or starting to see sliding down. So to that extent, we'll keep that as an open-ended answer. On the repricing side, there's a lot of room left. We took 2 rate hikes last year. One was in September, 50 basis point on our MB book, and one was in March, 50 basis point again on 1st of March. Of the existing book, 30% book is on the March pricing, 30% book is on the September pricing, and 40% book is before that. So on that 40% book, 100 basis point repricing is to happen. On that 30% book, 50 basis point repricing is yet to happen. So there's a lot of room left on the MB book repricing to happen.
So in that case, we still maintain a guidance of around 9% NIM for this year. Is that a fair assumption?
Yeah, we remain very confident that we'll be able to hold on to the NIMs.
And the second question is on the employee base. So you have added around 2,500 employees over the last 6 months. So mostly I assume these would be in feet on street. Is that right?
That's right.
And any particular geographies where we are adding employees, or is it all across?
See, employee addition to a large extent is happening because of the new branches that are coming. This quarter, we had opened around 32 branches in Q1, and in Q4 also, there was a lot of branches that opened. Last year, we did around 52, and most of the branch openings were back-ended. So there were a lot. These branches were opened, and the employees were hired for the new branches. Going ahead, 9 months, we will be opening around 70 branches. To that extent, some employee hiring will be happening. Whatever branches we are opening this second quarter, to some extent, some hiring has already happened. Apart from this, the hiring is happening. Maybe we have introduced RM modules for our branch banking. So there's some bit of a hiring happening. Some bit of a hiring is happening on our secured books where we are growing the business. For example, housing is going very well. There some ground level team is being added. And MSC, as the new products come, there will be a little bit of a hiring happening. So those will be additional hiring apart from the branches.
Sure, sir.
85% of whatever is hiring happening is in the front level staff that is happening.
Sure, sir. That is very helpful. Thank you, sir.
Thank you.
Thank you. The next question comes from the line of Manoj Oberoi from Yes Securities. Please go ahead.
Hey, hi, this is Rajiv here. Thank you for taking my question and congratulations on very strong performance. So my question is on affordable housing book. So as I see your 1+ and your GNPLs in this affordable housing book look slightly higher than peers when I compare them with, peers operating with similar ticket size and yield. Any specific reason for that?
The PAR and the GNPA for us has been, consistently coming down. If you compare the pre-COVID book and the post-COVID book, then Rajiv, our post-COVID book performance is significantly better than the peers. And, the 30+ numbers, if you can look at, we are better than all the affordable housing players there. Our NPA, in fact, for the last 22 months, source book is in the range of 0.1%, and 30+ is in the range of 0.5%. So the new book has done very well. The old book and the new book is about 65% of the overall book. The old book is where the NPAs are, and that is about 2.4% if we look at the overall book. And almost 30 to 35% of that is in the stage of sale of asset or repossession of asset. So that gives us confidence that this number will further go down because the efforts on legal that we had started almost 18 months back have given us a lot of results. So a good percentage of that has been taken, the bank has taken the property, is now in the process of auctioning. A good number of cases are in the process of getting, the enforcement of security is happening there. This old book is also, getting cured at a very fast pace. Last year, same time, I think we were in the range of 4.5%. And now we are in the range of 2.4%. And the absolute amount also has gone down by about 60 crores.
Yeah, got it. So there is some, remark that there is micro lab also in this book. So what percentage of this affordable housing book as we see is micro lab? And is this a focused product and what is the yield here?
Rajiv, the micro lab product is a very focused product for us. The idea is that wherever the large ticket size individual loan is there in micro banking, and we see that the family is able to support that bigger ticket size, we'll migrate them to micro lab. However, in the current book, the amount of micro lab is just around 40 crores.
Okay. And this will be scaled significantly. Got it. And in yield here,
the yield is around 19.5% in that book.
Great. Thanks so much. And best.
Thank you. The next question comes from the line of Deepak Podar from Sapphire Capital. Please go ahead.
Yeah, thank you very much, sir, for the opportunity. So just I wanted to understand, in terms of brand, I think you mentioned we will be continuing the brand investment in first quarter, right? So what was the quantum that we did in this first quarter, and how do we see that going ahead?
Deepak, we won't be able to share exact expenses of the brand campaign. The brand campaign went live on 24th of July, So to that extent, whatever the production cost and all was there, that was taken in the first quarter. The overall cost will come in first quarter and second quarter.
Okay.
It is a 5-week plus brand campaign. 8-week plus 8-week brand campaign is there, and the overall cost will come in both the quarters. First quarter is loaded with that, and to some extent it will be there in the second quarter as well.
Okay. So ideally in the first half only this cost will come, right? Not in the second half.
Yeah, a lot of it has already come in the first quarter, and the balance will come in the second quarter.
Okay, fair enough. I understood. And sir, just a clarification in terms of, I think this reverse merger, I think we had a last update as on 28 June, right? As you mentioned in your press release. So how soon we are expecting it to get through?
Deepak, it's a legal matter. We won't be able to give timeline on when do we hear from the court. Right now, what we can say is within this year, we believe that the matter would be wrapped up.
Within this calendar year?
Yeah.
Okay, understood. And sir, in terms of reverse merger, our share outstanding will decline by about 1.5 to 2%, right? Post the merger?
Would be 0%. There will be no promoter.
No, so 1925 million shares would be our revised share outstanding post the reverse merger?
So yeah, post the reverse merger, roughly around 3 crore odd shares will be cancelled. Net cancellation will
Fair enough. Yeah. That's correct. Okay, that's it from my side, sir, and all the very best. Thank you so much.
Thank you, Deepak.
Thank you. The next question comes from the line of Prabal from Ambit. Please go ahead.
Thank you. Am I audible?
Yeah, Prabal, but a little soft. Can you be a little louder?
Is this better?
A little better.
Well, my first question is on deposits. So, congrats on the performance here. So, as we are growing our deposit base, how are we ensuring that we also bring in customer engagement so that some portion of this new deposit accretion over a period of time becomes sticky with us and also less rate sensitive with us?
Hi. So on the deposit base, a lot of work is being done to increase the visibility and the awareness of our brand. And, Deepak also mentioned, and Mr. Davis in his speech also mentioned about the brand campaign that we are doing. So we hope to garner a lot of retail deposits through this campaign. We have also put in a lot of specific customer segment-wise programs which will help us in growing our deposit base. We are also categorizing our customers into, we've categorized our branches into various categories, and we have also introduced the relationship management piece in place. So we have a strategy for new customer acquisition as well as for the existing customer acquisition. Like I mentioned, the segment-wise programs for high net worth for customers, for senior citizens, for retailers, for TARs, for women, for youth. This is the way in which we will be growing our deposit base with a specific attention to each customer segment and also designing products that are required for that particular segment. The strategy is new and existing, deepening our relationship, and of course through the brand channel. We have also introduced the digital channel. The digital fixed deposit has been recently launched, and that is an area too that we will be looking at. Our service quality is another area for our customers. The customer service area is another aspect that we are strongly working on. We have the phone banking team to attend to customers for any of their requests. That's a channel that has been significantly upgraded, and we are able to do a lot of service requests through this channel.
Sorry to interrupt. Actually, my question was not on accruing new deposits, but more on how do we make sure that these new deposits become more sticky and stays with us, even when we reduce the interest rate.
Yes, so through all this, the customer service programs that we have, the multi-channel approach, the relationship management piece, this is going to help us in, and segmenting our customers with programs like with various programs and using analytics, we will be able to define our requirements for each of these customer segments and and a lot of cross-sell is going to come into the picture. So with all this, we will be able to deepen our relationship with the customer.
Okay, I'll take this offline. My next question is on, sir, can you tell us how is microfinance individual underwriting different from a group underwriting in terms of, what are the different processes in both the systems?
Oh, hi. So group loan, the individual loan underwriting is very, very different from how we do group loan. Group loan is classical Grameen model and it happens the way it happens for the industry. But as far as when customers try to graduate from group loan to individual loan, we have a separate feet on the street from business side who is supposed to acquire customers and onboard customers. And then we have independent credit team, right from feet on the street to the chief credit officers. We have independent credit team who analyzes customers based on their family level income. And this practice we are following for the last, 13-14 years, which is now mandated by RBI. And this is something which is done by credit officer individually and loan is underwritten by the credit officer. Apart from that, we use a lot of data analytics to understand which customer can graduate. We have a lot of data, internal data as well as external data available for the customers. We use this data to underwrite customers better so that we can graduate all eligible customers from GL to IL. So IL is a separate vertical where separate people are there both in business and credit. And apart from that, we use data to analyze customer better.
And just a last question. So what are the top 3 states, since we have a diversified portfolio across geography, what are the top 3 states where you are seeing better than expected traction? And maybe if you can also highlight the bottom 3 states where you are still watchful in terms of growth.
You are talking about IL or overall microfinance?
Overall microfinance.
So our top 3 states is Tamil Nadu, Karnataka and West Bengal. Obviously we have more number of branches. We started from here in region. And as far as bottom 3 is as such, we don't have bottom 3 in terms of growth. We have number of branches which is different in different states. But at this point of time, I would say that Assam is something where the industry is facing issue, and we are also very cautious, and we are doing we have changed our strategy in the state of Assam. Apart from that, we don't see any state where we see growth which is very low at this point of time. Overall growth is at par with the average growth of Ujjivan microfinance business.
All right. Okay. Thank you. All the best.
Thank you. Thank you very much.
Thank you. Last question comes from the line of Preet Nagar Seth from Wealth Finvisor. Please go ahead.
Thank you. So I wanted to better understand the upgrades, recoveries, and the written off numbers that you posted in the presentation. I thought you mentioned that the the bad debt recovery was, what, about 35 crores for this quarter?
Yes, 35 crores.
So how is this 77 and 60 coming? Could you just explain that?
Please, that 77 is the NPA recovery and upgrade. That is in addition to the 35 crore of bad debt recovery. That 35 crore is bad debt recovery, something that has been written off the book. This 77 is upgrades and recoveries of from the NPA book, which is still there on the book. And this 60 crore is fresh write-off during this quarter. 52 is technical write-off, and around 7 odd crore is other write-off.
So is it a write-off or is it a write-back?
Write-off.
Okay, because if you see the maths, then because you're starting NPA, then you have your slippages, and then you are adding back the recoveries.
No, so the math says you have a starting NPA of 631 and there is a slippage of 103.
Oh, okay.
Then you have upgrade. So you reduce that 77. Then you have write-off. So you reduce that 60 and the ending or the closing NPA is 597.
Gotcha. So how much of this can we expect to continue for the next quarters? Could it be in a similar range?
Are you asking for NPA guidance?
That's correct.
So we are at around 2.4%, and we would be ending the year by around, say, 2% on number.
Okay, so exit quarter should be around 2%. Okay. The other thing I wanted to understand was that should we expect a dip in disbursement for the second quarter given the flood situation that's ongoing in various parts of the country?
The flood situation has not really impacted so much on the business. So it's a temporary phenomenon in few days at few districts. So right now we do not want to say that it will impact the overall performance of the quarter. Neither on the collection side nor on the business side, disbursement side.
Gotcha. And the last question is, can you shed some light on the Ujjivan Hello app and how is that helping you win business on the ground or give you a right to win vis-a-vis all the other competitors out there?
I didn't get your query. Can you repeat?
Basically the Hello Ujjivan app that you have out there, right?
So your question is around Hello Ujjivan and how it will help us and customers.
That's correct. And how is it helping you vis-a-vis competition, right? Because one of the lines...
So Hello Ujjivan, we mentioned in the last call also that this is something which we have developed for especially for microfinance and rural customers. As we realize that our the original application our customers are not able to use because they can't read. And this application is where the customer can talk to the application and do their banking transactions. At the same time, we see this as an opportunity where this channel can be used by our customers in various activities, including onboarding repeat loans for our customers on this application. Today, we have about over 3 lakh customers who have already downloaded, and that is exciting news that customers are liking the application. Soon, we'll also have repayment is already there, and a lot of customers are repaying through this application, which also reduces your cost because your cost of transaction becomes zero. But at the same time, as we onboard repeat loans on this application, once the customer is onboarded in Ujjivan for loans, the repeat loans, top-up loans and other services which customers want around loan can be serviced through mobile application. This can be a game changer, and we are working very hard on building this application to ensure that all services, future services when customer is onboarded, can be offered through this application, including repeat, top-up, TD, reliability, relationship. We are trying to onboard through this application. So yes, this is something which customers are liking at this point of time. A lot of customers have installed, but at the same time, we are seeing a lot of new features being added in Hello Ujjivan going forward in this financial year.
Wonderful. Thank you so much. Wish all you guys all the best.
Thank you.
Thank you. The next question comes from the line of Sanjay Pandit from 1729 Capital. Please go ahead.
Hi, congrats on a great quarter.
Hi, Sanjay. Here you are not audible, Sanjay. Can you be a little louder?
Can you hear me now? Can you hear me now? One second.
Yeah, better.
Hi, can you hear me?
Yeah, better.
Hello, can you hear me?
I can hear you.
Okay, I'll go ahead. Okay, so my question is, for those holding Ujjivan Financial Services, the holding company, going into the reverse merger, does the ratio pretty much stand as is? And if so, would there be some kind of cash distribution prior to the reverse merger? And regardless of that, what kind of sort of per share book value accretion can Ujjivan Small Finance Bank expect to have concurrent with the reverse merger by virtue of, I guess, some cash coming into the bank?
Sanjay, book value accretion would be rupees 2 or maybe a little more. There is roughly around 180 crore of cash that UFSL currently has. So that will come to the bank, plus 200 crore of preference shares are there, which will get cancelled. So that will also come to the bank. So a total of 380 crore as is, which is there. If and plus whatever the bank has proposed a dividend, if that get approved tomorrow, that will also come to UFSL. So that amount will come to UFSL, and depending upon if or whether UFSL distributes that money in form of dividend or not, or whatever is the amount, basis that we still believe at least 380 odd crore is there, which will come to the bank, which means roughly 2 rupees book value accretion would be there for bank. There would be no cash distribution to UFSL shareholder as part of the reverse merger.
Understood. Okay, thanks.
Thank you, Sanjay.
Thank you. Due to time constraints, that was the final question. I now hand the conference over to the management for closing comments.
Well, I thank you all for joining us, in this session. It's been wonderful to take your questions and answer them. If there are any questions that remain unanswered, please contact Deepak or Madhusudan at our offices here in Bangalore, and we'll be happy to respond to you. I'd like to take this opportunity to thank Mr. Shah, IIFL, for their coordination and hosting of this call, and to Chorus for their logistics. Thank you very much.
On behalf of IIFL Securities Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Please subscribe and press the bell icon to never miss another update. Please like, share and